welcome. Thank you for joining us today for our webinar presentation on understanding your home's equity. We appreciate you taking the time out of your day to be here with us. Just a little quick introduction of myself. My name is Jade. I'm the Business Development Officer here at Sacramento Credit Union, and I've been in the credit union world for a little over 10 years now. And today I'm going to be your guys' host. So for today, just a few quick housekeeping notes that I want to go over with you guys that you see on your screen. This presentation will last about 60 minutes. This session is being recorded and it will be available on our website, and we are also going to be emailing you a short survey along with the link to this webinar so you have it for future reference. As you may have already noticed, your microphone and your video are turned off. This is solely to avoid any background distractions or noises, because we only have a limited amount of time with you today, and we want to make sure we give you the best presentation possible. We do have our chat feature open, which I mentioned earlier today. You guys are welcome to enter any questions you have during this presentation. We will take about 2 times during this presentation to address any of those questions that we're getting in. But if I don't get to your question, just know that at the very end we will have that Q&A session, so I will address those at that time. So for this presentation today, we have Tatiana here with us. Tatiana is the branch manager at our Roseville location and has been with Sacramento Credit Union for 24 years. So she is bringing a wealth of knowledge when it comes to our home equity products. So without further ado, please help me in welcoming Tatiana.
Well, hello everyone, and welcome to our home equity seminar. Thank you for joining us today. We are going to be learning about home equity and home equity loans. So what do you do if your heater bursts, the roof starts leaking, and you need a good amount of cash for repairs? Or if you're just tired of looking at faded patches in your grass, peeling kitchen cabinets, and outdated bathroom? Well, for 24 years, I've been helping members of Sacramento Credit Union answer that question, and I understand the solution might be just in your home equity and a home equity loan. I want to prove to you that the home equity loans are not a scary and confusing topic, but one of the most powerful financial tools you can use. As Jade mentioned, we can take the question during the presentation through the chat or just until the end of presentation, and questions will be answered. One other thing I wanted to add to that I'm getting over this cold, so if you hear me coughing, just ignore it. Pretend like you're not hearing anything. Okay, so on today's agenda, we're going to go over how to build your home equity, how the home equity is calculated, and things to consider and how to make the right choice, because not everybody has the same situations and everybody has different choices to make. So what is home equity? Does anybody knows what home equity is? So home equity, it really is the amount of the house that you actually own. It's really the difference between today's value of your house and any loans you might have against it. So very commonly, that's a mortgage, sometimes solar loans, construction loans, or anything that has a lien on your property. So the actual home equity is not what you can really borrow against. It's calculated a bit different, but for just a start, you will take your home market value and deduct the mortgage balance. So let's say the market value is $650, and you deduct your mortgage balance plus any other loans you have on your home, you will get your home equity dollar amount. So how is your home equity built? You can build it different ways. So the first one is your monthly payments. So every time when you make a payment on your mortgage, you pay towards the principal and you pay towards the interest. Hopefully you don't have an interest-only payment, because then you will never pay down your mortgage and not build any equity. You also build your equity through market appreciations, meaning if the home prices are rising in the market, your home equity is rising as well. And also home improvements. So anytime when you do any kind of home improvements, you're updating your home, you are increasing your equity. Now, sadly, that equity doesn't go dollar for dollar, so you might spend $30,000, $40,000, $50,000 in your home improvements, but your equity does not grow dollar for dollar. And the last one is your initial down payment. So when you purchase your home, you hopefully put some money down. So whatever money you put down, you already have that equity built in your home. That's pretty much it on how is it built. Does anybody have any questions?
We don't have any questions so far.
Okay, well, good. Just want to make sure I address it all. So how can you use your home equity? Now, there's two types of loans that they are currently offered at Sacramento Credit Union and mostly at other financial institutions. One of it is home equity loan, and then home equity line of credit that is also called HELOC. Now, if you're asking yourself, why would you borrow against your home? It really is that you're borrowing money on the cheapest interest rate and a lower payment. And it's the best way to get rid of your bills or get some money to do your home improvements. Now, the first one we're going to talk about is home equity loan. Now, home equity loans is an installment loan. We're still borrowing against your home. It's separate from your first mortgage, and sometimes you'll find out that they called it second mortgage. There are many good things about home equity loan. You will get the full amount in a lump sum. The interest rate and payment is fixed. In Sacramento Credit Union, the loan ranges from 4 years to 20 years, depending on the amount that you're borrowing. Once you get your money deposited into your account, when the loan is done and signed, you will get your full amount into your account. The payment starts 30 to 45 days after the loan is funded. Amounts that you can borrow on the home equity with Sacramento Credit Union, they go everywhere from $10,000 to $250,000. The common uses for home equity loans, what I generally see is number one, home improvements, because we all know how much new kitchen costs. That's why I still have an old kitchen in my house, because I left that for the last, but it's pretty pricey. People use it for debt consolidation because you have a lot of credit cards or personal loans out there that they are in 20-30% rate. With home equity loans, you can consolidate everything in a lower rate. When kids are going to college, you need extra money. The tuitions are increasing every year. People use home equity loans for that as well, or any other significant purchases, or combining all of it together in one loan over the longer period of time. The second one is home equity line of credit. People always call it HELOC. And HELOC is pretty much what it says. It's a line of credit. It kind of works like a credit card, but you don't have plastic. So the good thing about this loan is that you can borrow as you need the money, and you're only making payments on the amount that you're using. The one thing about home equity loan, line of credit is that the rate is not fixed like in the previous loan and the home equity fixed. This one is a variable rate. We offer 25-year loan. The draw period on this loan is 10 years, and payments are calculated over 15 years. Now, I know that could be a little confusing. So basically, if you get the loan today, you have 10 years to draw the money from it. So it's calculated over a 15-year period. At the end of the draw period, you still have 15 years to pay it back. That's why we say that it's a 25-year loan. Your monthly payment will depend on the amount borrowed, and it also depends on the rate that it's out there today. I noticed when I was doing a little bit of research that other lenders on a lot of home equity line of credits, they offer interest-only payments on a home equity line, which I really didn't like, to be honest with you, because on a 10-year draw, you're just making interest-only period, and a repayment of the loan starts on the end of the draw period. At Sacramento Credit Union, we don't have that. You use it, like I said, you use it like a credit card, and you make payments. The portion of that payment goes on the principal, and portion of that payment goes on the interest too. Rate is tied to your credit score and it's based on the prime rate that is also known as a Wall Street Journal rate. So when you hear the Feds are lowering or raising the rate, that's the rate that they're talking about. So that's the rate that is tied to pretty much all line of credits out there, including the home equity line of credit. How are we doing so far? Are we understanding everything? Are we confused about anything?
We have actually just one question. What
Yes.
sources are generally used to get the market rate for a home? What do we use here at Sacramento Credit Union?
So we're using the prime rate, like I mentioned earlier, so the Wall Street Journal rate. Is that the question? Did I answer it correctly?
I think it might be like the value of the home. We can talk about that too. What sources do we use to get kind of the estimate of the home as well?
Or what sources do you use it for the for the actual value of the house? Okay.
Mm-hmm.
So when you apply at Sacramento Credit Union, we run something that is called electronic value. So we kind of see what's the in area, what is the houses are selling for, and then we go by that value. Now, depending on the amount, we might order a drive-by appraisal, and also it could be a full appraisal where we really try to avoid it. But if on a few occasions, I've seen that as well.
Awesome. How much can you borrow for a HELOC?
For the HELOC, with the home equity loan, you can borrow everything from 10 to 250, but for a HELOC, we go up to $100,000. And it starts, the minimum is 10,000 and maximum is 100,000.
Beautiful. And then the last one is, how is the rate adjusted and how often?
How often? Well, I think the Feds, they meet quarterly and the rates could be raised or lowered every month. Recently, we're seeing them lowering the rates. So right now, the prime rate is at 7%. So our home equity starts at 7.75. And the prediction is that they're going to lower it again, but you never know. So really, you don't know. The answer is you never know.
This is true.
Sadly, right? So there's no. Sometimes you see these promises that they're going to lower it, and they meet, and then it really doesn't happen. So you can never tell. It all depends on the economy and all the other factors.
Awesome, thank you. One more question. So you can draw the max of 100,000 for 10 years, then start paying after 10 years for 15 years, or can you start paying as you borrow?
You start paying as you borrow, and that's what's really good about a home equity line of credit is that you borrow when you need it and you pay it as you want. So you do have monthly payments. As soon as you have a balance on it, you start making payments, but it's calculated on the amount that you borrowed. So if your line is 100,000 and you only use 20, your payment is calculated on 20,000 over 15 years. Now you can always pay more. You can pay it off next month and start borrowing again. As long as you're making payments, you're fine. And as long as you don't have a balance, you don't have to make payments.
Perfect. And then yes, to answer that first question, you do have 10 years to utilize the draw period. So you have
Correct.
10 years to use as much of that money as you can, or as you want, not as you can.
Correct. Yes. So you have 10 years to draw period. We usually, when I see people, excuse me, towards the end of the 10 years, they reach out again and they say they want to renew it. And the process generally starts over. And then you get another line of credit that you have another 10 years to draw.
Awesome. All right, Tatiana, you can go ahead and continue, and we'll address any extra questions at the very end.
I appreciate your questions. So before you decide how to use your home equity, you have to consider following factors. Loan to value ratio. So loan to value is really what you can borrow, right? So the amount you can borrow will depend on we call it LTV, loan to value, your credit score and debt to income ratio. You can typically borrow up to 80% loan to value. Depending on the amount, sometimes it goes to 70%. Now, let's say that your home is valued at 400,000. you're going to divide that by 80%. So you're going to get the $320,000. If you deduct your mortgage balance or any other mortgage or any other liens you have on your property, you will get the amount that you can borrow against for home equities, loans and lines. Now, so 480% of that is 320. You deduct your mortgage of 200, you get 120,000 maximum HELOC line amount. Now, keep in mind that Sacramento Credit Union on HELOCs, we go only up to 100,000. Now, if you need more, then you will have to go to a home equity loan that goes up to 250,000. So the interest rate, so home equity loans have fixed interest rate while HELOCs have a variable rate. You kind of have to consider your comfort level on like which one you're deciding. A lot of times, like when I talk to people, if you come to me and you say, "Hey, I need $30,000 to fix my landscape," we're gonna just go with $30,000 fixed. But if you're saying I'm doing the remodeling, I'm gonna need money, or I'm gonna put my kids to college, plus I wanna remodel my house, then maybe line is better for you. But it really depends on what you're comfortable with. The current average rates for home equity loans range depending on the term and your credit score. So, for example, you have $30,000 7-year home equity loan. It starts at $599 at Sacramento Credit Union. That gives you approximately a payment of $438, while $30,000 a 10-year home equity loan starts at $699, and that your payment is at $348. So you kind of decide you want a shorter term, larger payments, lower term, higher interest rates, but also lower payment. Our HELOC rates are currently ranging from 7.75 and they go up to 9.5%. Again, it depending on your credit score and then whatever the current prime rate is. So the current prime rate is at 7%, and that was changed or lowered on November 3rd. So just recently. I hope this is not just too many numbers for you guys, and you can always ask me questions and we can go back to this slides if you need it. Now, the higher credit score you have, the better interest rate you will have. With home equity loans, the Sacramento Credit Union, we pull only one credit score. For, as you remember, when you're purchasing your home, we usually pull all three. But for home equities, we only do one, which is Experian. We also a lot of times members don't know what the debt to income ratio is, but really is the amount that you can afford to get another loan. It's calculated, you divide your total monthly debt. You were going to list all your monthly debts. You're going to calculate and say, hey, I have $2,000, including my mortgage, my credit cards, my car payment, and you're going to divide that with your gross income. And you multiply that by 100, you're going to see what your debt to income ratio is. Most financial institutions don't go over 50%, but to be on the safe side, I will say 45% your debt income ratio would, you'll have eligibility to borrow something. Your credit score determines your rate. Your debt to income ratio is the percentage, like I said, of your gross monthly income. And we use that ratio to ensure you have enough income to cover new loan payment on top of the existing debts. The last thing that credit union wants to do is put you in a debt you cannot afford. So that's why debt to income ratio exists. Any question about that?
No question about DTI.
Yeah, I know it's sometimes people don't really understand it fully. So hopefully if you guys don't, just let me know. So other things to consider is your repayment structure. I understand that the repayment terms for both home equity and home equity line of credits, one is fixed and one can vary. So be prepared if the rate changes, the payment can increase, but it could also decrease. So hopefully you pay that off sooner. So possible early payment fees. Now with Sacramento Credit Union, we don't have any fees for home equity loans that we charge. Well, we don't charge anything for processing. However, there are some third-party fees. So like if we order the appraiser or if for the recording and a title fees. At this time, we don't pass these fees to you, so the credit union pays for all the fees included with the home equity loan. But what we have is a fee reimbursement. So if you pay off your loan within 36 months, that is 3 years, we have something called fee reimbursement, and it's never more than $750. So let's say you get the home equity loan, and then in the 2 years you sell your house. Anything that it cost us that we paid the fees for the loan, we will include that to the payoff letter. And then again, it's never more than $750. The other benefit of doing the home equity loans is that there's some tax implication. In some cases, the interest rate you can deduct from your taxes, but that's not something I can talk to you about. You have to talk to your tax professional because everybody has a different taxes, a different tax returns, and the laws change too. I don't know, is it often, but they do. So you will have to check with your tax professional to understand how would that apply to your specific situations. But there are some possible benefits for home equity loans. And then, of course, making the right choice. The best way to utilize your home equity depends on you and what really works for you. So we mentioned this many times in this presentation is depending, do you need a lump sum? Do you need the money available during the draw period of 10 years? And just use it that way. And at the end, why choose Sacramento Credit Union? Many people are surprised when I tell them that all credit unions, including Sacramento Credit Union, are for nonprofit organizations. We have board of directors that we answers to. We don't have any owners. The key reason to choose us is that Sacramento Credit Union, we prioritize you and your financial well-being. We provide personalized and attentive service. You are working with the same person from the beginning to the end. Number 2 is community investment. You will be banking with a local credit union. Your money is reinvested and it stays in your community. Since we are member-owned and not-for-profit institution, and for that reason, we can offer a more competitive and generally lower interest rate compared to the profit banks. Lower cost or no cost. There is a cost associated with the home equity loan, but as Sacramento Credit Union, at this time, we did not pass that cost to you. And we offer both traditional fixed home equity loan as well as a home equity line of credit that is not interest only in the draw period. And the loan decisions are made locally, which leads to streamlined and faster processing. So either way, it's a win-win.
Awesome. Thank you so much, Tatiana, for that presentation. It was very thorough. What we're going to do now is enter that Q&A session. But before we get there, I just wanted to point out that we have our QR code here on the slide. If you guys are ready to get this process started, you can scan it now or take a screenshot with your mobile device, and you can scan it later after this presentation. And I also included our 7 locations. If you guys want to just walk in, talk to one of our home equity experts, they're there for you to answer your questions. If you are a non-member, that's totally fine. You're still able to apply. If you are approved, just know that you will have to open an account to get everything processed. And let me go ahead and get to those questions really quick.
Yes, please.
So I have 2 that one of them was kind of answered within the chat, but just so for everybody. This one says, if I'm trying to understand the value of my home, how can I, a non-banker, get an understanding of my home value since I don't have access to electronic appraisal?
Well, most people go to Zillow. So on the internet, if you just Google the website Zillow, you can look up your property value when you enter your home address in it. There's several out there. Or I can tell you, like if you just search your address in a Google bar, it's gonna pop up. So the one that I usually use is Zillow and Redfin. So you'll see the difference in the two, and we kind of take the average, like just to approximately calculate your home value today. And if you go there every day, you'll see that it's going to change every day, pretty much.
Perfect. The second question we have here is these home equity loans do not affect my mortgage interest rate, correct?
No, they don't. So the home equity loans are separate from your first mortgage. It does, it's a separate loan, it's a separate payment. So you continue paying your first mortgage as you usually do. And you'll just have another payment to another institution on top of it.
Beautiful. And is there any other questions that you guys want to go ahead and answer? I know that we kind of went through it maybe a little fast for you, but if there's something that you want to revisit, we're more than happy to go back to that slide. So I'll give you guys a few minutes to, if there's any questions, put those in the chat box.
There's no silly questions. All questions are good.
I know that the home equity loans and products can be a little overwhelming at times, so please take this time. Like I said, ask any questions that you have. Any and all questions are welcome. Don't see any coming in, which that's totally fine. Tatiana, if you want to go ahead and go to the next slide, I just want to give them your information. So on behalf of Sacramento Credit Union, we thank you and we appreciate you being here. Tatiana's information is there for you guys. I'm going to leave this up and go back to the chat box in case there's any additional questions, but please feel free to take Tatiana's information, reach out to her if you need her, or visit one of those 7 locations. A question here. I have a HELOC loan with you now. Can I open another one or use the other one to pay off the current?
Yes. So let's say you have one that is like for $30,000 and now you realize you need larger amount or you want to switch from home equity line to fixed, you just need to reach out to us and then we'll start the process. It does not update the new loan, the old loan, it starts complete new loan. So one will pay off the other one and you will continue with a new one.
And when you do those loans like that, Tatiana, does that fee, that $750 fee, does that apply to the, like, I guess, refinances with those equities?
It depends how long you had it with us, but we look into it, yes, and then we can talk to you about it.
Awesome. Any other questions from the audience? If not, like I said, it's totally fine. You have Tatiana's information here. And Tatiana, if you want to go back to the previous slide, we'll show all of our locations again. And please feel free to go into any of those branches and set an appointment, talk to one of our home equity experts, and hopefully get the process started.
Yeah, don't feel scared to ask any questions. You have my information, you have my email, or if you just look for Tatiana, if you call our customer service and look for me, they will transfer your call to me.
Awesome. Well, since there are no more questions coming in, which is totally fine, like I mentioned, we'll leave this information up here for you guys. If you have any questions, please reach out to Tatiana or call one of our branches. Thank you guys so much for being with us. We hope to see you at our next webinar.